Good morning, everybody. Welcome to the Game Plan. Of course, I'm Gareth Soloway, Chief Market Strategist here at Verified Investing. We have a lot to cover today. So much going on. Yesterday, the Federal Reserve meeting and decision. Jerome Powell's comments really not doing a whole lot to the markets. They kind of chopped around a little bit, but overall stayed steady. And then late in the day, just about 10 minutes before the close, we saw a big surge to the upside in the chip stocks as it was announced that some of the chip curbs that were put in under Biden would then be removed. Now, again, if you think about it logically, do you think that an announcement like that coming after the Fed, and then we heard late last night into today that there's a deal with the UK in terms of the trade war, essentially getting a trade pact or a trade deal done? Think about it logically. That is not a coincidence. I guarantee you that ultimately Trump and everyone in his administration said, listen, we know Jerome Powell is going to come out and not raise rates. That could be problematic for the market. So let's plan some announcements right after that, and then another one in the overnight to keep the markets from really focusing on the Federal Reserve decision and lack of cutting rates. Really interesting when you think about it like that. Bottom line is, markets didn't do a whole lot on Jerome Powell, then rallied late in the day on the back of that chip news. And then ultimately, what did we see? We saw overnight the futures moving sharply higher on the back of this UK trade deal. Now, the key with the UK trade deal, there'll be a press conference at 10 a.m. And again, it's going to be a whole lot of cheering and wahooing and all that stuff. But the question I have as a trader, is it going to be a sell the news event? This is probably the easiest trade deal to make with the UK. The question is, are there other trade deals coming? So let's jump into the charts and take a gander. You can see that, again, this was that late day surge on the futures when it was announced that the chip curbs would be kind of reduced. You saw a big pop kind of late in the day after the market chopped on the Fed. And this is, by the way, the Fed announcement, Jerome Powell talking, Jerome Powell chopping here, and then that late surge right here. And then right here in the overnight, basically around, looks like around 20, that would be around 8, just before 9 p.m. This was when the news broke that there was a trade deal with the UK. And you can see the futures go up and then continued up. And then we are seeing a little bit of profit taking in the morning session here, okay? So a little bit coming back in, but we are still up significantly on the day. In fact, we're up about 0.75% on the S&P. Now, look at this. This is today's candle on the S&P futures. We are trading up. Look at the high right back to that line. So this is your line to beat right here on the S&P futures. It's right around 57.13. If we flip over to the SPY, that same level would be right here as well, right in this vicinity, probably right around that previous high as well. But one of the things I'm watching for today, folks, on the S&P, and we'll actually go to the actual S&P here. Here's the actual S&P chart. But the thing that I am going to be watching very closely is, do we have diminishing returns? Now, what do I mean by that? What the heck is diminishing returns? Diminishing returns is we have a trade deal announced. In theory, this is the best news yet since the trade war collapsed, right? The stock market collapsed on the trade war because we actually have a deal. So in theory, we should see a new high short term in the S&P, meaning we should take out the highs from last week before the little pullback. If we don't, that could be problematic. That could be showing diminishing returns, meaning that as we get more good news on another trade deal, do the markets start focusing on, okay, we know those are coming, but what is the economy doing? What's the impact on prices? What are the other factors? And that, as a technical trader, is very important because it gives you insight into the relative strength or weakness of the underlying market and how I might want to position myself as a swing trader. Okay. Going back to the charts here, guys, again, on the S&P, we had our gap fill right here. We had one close above it last Friday right there. And then obviously we saw Monday, Tuesday, and Wednesday. And again, the question is, do we come up and take out this high today, which is right around the 57, almost to the penny, 5,700, just a slight amount above that 5,700 level on the S&P 500. Same thing could be said for the QQQ. Qs are up sizably today. This is the NASDAQ 100. But if we look at this, see this line up here? If we go to our daily chart, That's basically this pivot high. And then just below that is the high from just last Friday. So I'm watching that zone very closely as well to see if we get any significant kind of, push through of that resistance point. Okay. Now turning to the 10-year yield. Let's look at the 10-year yield in the dollar. Again, I usually like to look at the 10-year because it's so important to the stock market right now based on the amount of money that has to be refinanced. Remember, $9 trillion in US debt has to be refinanced essentially this year. So interest rates really do mean something. And we certainly saw it when the initial trade war started, right? And the US slapped massive tariffs on pretty much everyone. We saw yields going up instead of down. Down is the usual because it's a flight to safety of bonds, which draws yields down. But instead, we saw yields going up, which in my opinion showed us that other countries were like, okay, you're going to do that to us. We're just not going to buy your debt. And that can be problematic for the US. So flipping back to the 10-year, we still see we're stuck inside of this kind of bull pattern. So this is still a bullish pattern. What we don't know is, are we going to come down here first before moving back up and breaking out? Or are we making a little bit of a micro bull pattern here, and then we're going to break to the upside? And ultimately, again, what we do know is that this is a probability pattern, which means it has a bullish bias to it. Means more likely than not, we move higher on yields, which either implies other countries don't want to buy our debt again soon, or it means that inflation is going to start going up. And that's going to make it tougher for the Federal Reserve to cut. We don't know what they are going to be yet. But again, we still have not felt the full impact of the tariffs. And I want you guys to understand this. This is really, really important. So going into the trade wars, we all knew it was coming, and businesses knew. And so what did they do? They front loaded and bought a ton of inventory ahead of the trade war, essentially 3 months of inventory. So toilet paper, whatever it may be, all these different things, right? We went through COVID. A lot of us remember when things were very scarce on the shelves during that period. So you basically have this window where prices are probably not going to go up much from the beginning of the trade war for about 3 months until that inventory runs out. Then that would be the point when we start watching prices closely. So when we talk about CPI, Consumer Price Index, PPI, Producer Price Index, PCE, the inflation gauges for the U.S. markets here, what we're looking for is them to probably stay pretty stable for the next month, month and a half, 2 months. But then after that, we have to watch to see if they start surging to the upside based on the trade war and prices. Now, listen, maybe we get a lot of deals like the UK, but really the ones that are going to be important are ones like China, right? I mean, things where we get a lot of our cheap products from places like China, Vietnam, Thailand. Those will be the most important for the stuff that you and I buy on an everyday basis, like the staples, right? So things to watch there. All right, so flipping back to the 10-year bullish pattern there. Again, look at the lack of movement on the Federal Reserve. We still have a bear flag formation here. Very little price movement yesterday on the Fed as well. Essentially, the Fed decision was nothing new, meaning we did not get anything surprising from Jerome Powell. Again, no rate cut. At the same time, he said he's a little concerned about the economy and about inflation, but nothing more than what we already knew. All right, Carvana. Carvana reported earnings yesterday after the bell. The stock initially sold off, then rallied back and is floating up into the open today. It's not up a lot, but the reason I'm bringing this to your attention is you can see the line here. This is your pre-market line. Do you guys see what's just above that? There's a gap fill right around 282, right? So 282, give or take, there's a gap fill. That should be resistance. In addition, if we zoom out and go back to our all-time high on Carvana, what do we have here? We have a trend line going down from that level to this high here, and it's just above that. So again, when I'm looking at Carvana here, you have double top, you have this trend line, you have the gap fill, basically 282 to 286, maybe to 290 double top. There should be a lot of resistance here on Carvana. So I'm going to keep an eye on that one, guys, in the live trading room today. That's actually, in my opinion, a good swing short as well. Carvana is a good, solid company. They've really come a long way since 2021 when they were close to bankruptcy. Their earnings were very solid. But again, the thought process is if the buyers and consumers get stressed, guess what? They're going to step back from buying cars, even used cars, across the board. Here's Shopify. Shopify reported earnings this morning, taking a nice dump here, trading down around 88. If we go to the daily chart on Shopify, you can see there's a gap fill right here at 85.65. The problem is that, look, we already went down to that. Here's that 85.65 level right here. So we already pierced it pre-market, and look at the bounce that we got. So on a technical basis, sometimes when earnings are released, the gaps that are made during market hours can actually be used pre-market. And in this case, it was, and it already bounced significantly, right? I mean, basically 85.65 back to 88.30 or 88.40 even, right? So, I mean, that's a huge percentage bounce in a few 10-minute candles. Now, the question is this still a buyable level here? I don't like it. All right. I think there's higher risk. You've already hammered on it, albeit pre-market. So for me, I'm going to look for a lower level. Where would that lower level be for me on Shopify? Basically this low pivot here at around 80.5. If we were to go down there, I would consider a long opportunity. And again, remember, for those of you that are newbies, long is buy and short is sell, right? It's where you short a stock, where you buy a stock. People in the business, we just say go long, go long or go short, right? Okay. Here's AppLovin. AppLovin surged yesterday sharply on earnings. Remember, this one's kind of been beaten down. It had that crazy rally to the upside here. It then came down. The level I am watching on AppLovin is around 377. There's a gap fill here. That would be my first level on the short side. So remember, as a trader, we are counter trend trading. And what do I mean by that? Essentially what you're doing here, and this is more for trading purposes, long-term investing is different, but for trading and swing trading, day trading and swing trading, for the most part, I'm a counter trend trader, meaning that I rely on excessive greed to cause a stock to go up to a ridiculous level where it shouldn't be, and then noticing the technical level, which is where then I short, and as the greed kind of gets dissipated, meaning everyone gets in that wants to, they FOMO in, that's where the stock will come in off of that level. Same thing on the buy level, right? So a stock could be dropping precipitously. I'm looking as a trader for multi-factor supports where panic and fear drive things down way too much, then hit technical multi-factor support, and you get that relief bounce back. Now, you can be a trader where you buy momentum. It's just very tricky because we know momentum, when it dies out, can be very rough and reverse. And a lot of people tend to buy at the highs just before the fall. That was me, by the way, case in point, early on in my trading career. I would do exactly what every new trader does, which is basically the wrong thing. It took me a long time to learn, but I finally corrected these behaviors, got my discipline in alignment, got control of my emotion, which did not come overnight. It took long periods of time and a lot of work to really shut my emotion down and make decisions based off probabilities versus emotion. And again, listen, it's tough. I'm not going to lie to you guys. Becoming a good trader is exceedingly hard. It's doable for everyone. My IQ is no higher than anyone else's. I'm not any abnormal person by any stretch. I guarantee you that. It was just my work ethic, right? It's work ethic, which everyone has, in my opinion, deep down. All right. Going back to the charts here, ARM Holdings fell sharply on earnings. You can see, again, it fell massively. But look at this rally back on ARM Holdings. Wow. What a comeback on ARM. And that, again, now the question is, so for me, there's no real buy level. I mean, it would have to come down to double bottom at like 109. But the question is, does it rally enough to become a short as a day trade? Maybe around 120. There could be an opportunity here. Their earnings were not good at all. So 120. Now on a swing short, see this, guys? I'm going to get rid of this one here. But on a swing short basis, see this parallel? If we were to rally up into the underbelly here, that to me would be a good swing short right there. Right there, retrace, pivot low, pivot low, pivot low, broke down, confirmed, went lower, a retrace, boom. That should be a high probability level for a pullback. On the smaller note here, QBTS, which is a quantum computing stock. You can see all the quantum names like Rigetti are rallying higher, IonQ. This, again, they reported earnings. Their earnings were better, at least whatever they said. I didn't look into it specifically. It's a little too small for me to trade generally. But again, This one had a big push up on the back of earnings, and it is pulling back just a little bit. I would never short something like this, guys, at these levels. So it's useless for me to go to the daily and be like, oh, maybe short up here, because something like this could squeeze, and I don't like to put myself in the position in case that happens to be, basically be at the mercy of something like that. Now, take a look at Bitcoin. Bitcoin surging on the back of the trade deal news and the whole stock market risk on. Bitcoin pushing up. It kissed 100,000, went to $99,919.99. Sounds like a on sale price, right? Everything's nines and 99 cents. But the point being is it is pushing above this level in the near term. That could open the door to potentially go up to about 101,000 right here, and possibly even not only test your all-time high, but your 113,000 level. Now, again, is it getting close yet to a shortable level for me? Not yet, but if it pushes north of 100, I will start to look closer at a short opportunity here, right? And remember how I trade, guys. I don't trade like, oh, I'm going to pick this level, and because I'm so sure of myself, I'm going to put all my money in on this short trade. No way, because I'm frankly not sure of myself, right? The market teaches me lessons daily, right? In fact, yesterday, I've had a great run in the live day trading room with lots of winners, big winners. Like we made over 20K on Palantir short in the live day trading room, holding that into earnings. It was a great chart setup. Had it as a swing trade as well with swing trade members. We made a lot of money there. But then yesterday, Google, I started to inch in at supports, and Google just went down and down. It did bounce by the end of the day, so I only took a smaller loss. But just another example of how I've traded for 26 years now since I made my first trade, right? Now, listen, my first trade, I wouldn't call myself a trader. It was just kind of an idiot, frankly. But the point being is that, 26 years of experience of trading, and the market will still teach you lessons. And that was a great lesson yesterday. It's like, you don't think you're going to be always right. And so my point being is, with Bitcoin, if I do decide to short, let's say at 101 or 105 or even at 113, it's going to be a starter position. Starter positions, slow and steady really does win the race in this game. And it's so counterintuitive, right? Because most investors are like, oh, I only have 10K or 5K or 1K or 20K, whatever it is. I have to double that money in a week. Well, that's taking risks where eventually the market will just take it all from you. Guaranteed. Like I've never met a trader that's traded like 1,000 times and has just been like double, triple, quadrupling their money like over and over again. Sometimes you double it once, you double it again, and then the next trade wipes you out. So the point is that slow and steady really does win the race in this game. And I can vouch for that. My first 5 years of trading, I was just that. I had 10K. I went in with 10K to trade my own portfolio. I used a prop firm, so I had leverage on that. And basically, I just, lost money. And I tried to do stupid things, right? I bought at highs. I sold at lows. I did all the wrong things. It was once that I learned about money management and discipline, technicals, but also the discipline of not going all in on a position. That's really where I saw my change from being a losing trader to slowly going to becoming a winning trader. And then what's nice is when you're a winning trader, you'll have setbacks along the way. We all have that, right? But you don't really go backwards to the point where you're always a losing trader again. It's not like you can be a winning trader for 5 years and then all of a sudden be like, what happened? Did I forget everything that I knew? Now I'm a losing trader for the last 2 years? No way. It doesn't really work like that. It works like it's degrees. So you become a winning trader, and then a little bit, like in the next couple of years, a little bit more, a little bit more, a little bit more. And your profit and success rate generally just increases because your discipline and your eye for taking the technicals in increases as well. All right, so I digress, guys. Sorry about that. The point being, Bitcoin having a good move to the upside here. I will be keeping an eye on it. All right, gold, guys, take a look at this. I told you guys the other day, gold likely to pull back. This was a retrace. Now, gold has bounced off of its lows here, still down fractionally, but let's keep an eye on this. But I still am in the camp that gold probably pulls back to here. The one thing that would change my mind is if we have a daily close above 3,500, then that would negate the topping tail and close us above this line, especially if we confirm above this parallel. Then it likely is headed towards 4,000. I still think it's going to 4,000. Don't get me wrong. I just think you're due for a bigger pullback to this level here first. Let's take a look at silver real quick. Silver is basically doing nothing, still stuck between these two lines. Oil today, getting a little bit of a bounce back here. So again, it's after a sharp move down. It looks like it's consolidating in a bearish flag pattern again. No trade here for me at this point as well. And the natural gas here, if we bring up nat gas is trying to break this short-term resistance. My short level will be somewhere up in this $4 range. If it gets up there in the next few days, I likely will take that trade with Smart Money Commodities members. All right, guys. So listen, lots to go over, lots of lessons to be learned. And my hope is that my hard lessons that cost me a lot of money can hopefully help you guys avoid some of that. Listen, I'm going to tell you one thing. I've never met a trader that, even if you studied for 10 years trading, you're always going to have losses. It doesn't go away. Even after 26 years, I still have losses. But the idea is, can you lose less, right? How much do you have to pay the market to learn the lessons? I had to pay the market a lot, especially in my early years when I didn't have a lot of money. That was when it hurt the most, frankly. But again, my hope is that these game plans, that the education that I bring to you guys, that the trade setups, you guys start to understand how I'm making those decisions. It hopefully shortens your learning curve and therefore helps you compete and eventually beat the institutions. Because I'm telling you, you can beat the institutions. All right. There might be the elite ones at the top that are really hard, but 95% of all institutions are beatable. And you can do it. It just takes study and discipline and really understanding of market dynamics, psychology, etc. All right. I digress again, guys. You guys go have a wonderful trading day. I got to get to my trading room. Check us out here at verifiedinvesting.com. It's all data, all charts, all the time. Take care.